Hey, look, we got the Doge shirt. We got the Doge shirt tonight. What's going on, guys? What's going on, guys? Guys, we're gonna go over a bunch of stuff, but I do want to start with what I believe is the market driver right now, and it is not Bitcoin. It is not Bitcoin. It is traditional markets, the S&P, the Dow Jones, that kind of stuff. So it is, in my opinion, it is the best move is to go over the Dow Jones to start with, the DJI. Now, a lot of people believe that the crypto markets are completely separate. They are completely unrelated to the traditional markets. That crypto traditional markets, there's like some kind of weird gap between them, and they never affect each other. That is incorrect. And you can demonstrate how incorrect that is by pulling up two charts and two charts only. I'm going to have on the bottom Bitcoin on the daily, and I'm going to have on the top the Dow Jones. Okay. And I'm going to zoom them both way out. You see on both charts this massive sell-off. You see this sell-off right here, and how it's almost a mirror of this. Okay, this was a moment in time when all the world was scared in unison, when everyone was very, very worried. A lot of people blow that off. Oh, that was COVID. Jack, that's COVID. You know, that's not a big deal. You can't really look at that. All right. You're right, homie. Let's look back at before COVID, pre-COVID. So here's COVID, traditional markets. Here's COVID for Bitcoin. Okay, this is traditional markets. Nice little sell-off. What did Bitcoin do? Bitcoin went from 6,000 to 3,000. So, okay, let's keep backing this truck up. What about this sell-off? Well, that was the Bitcoin top. This was when hedge funds went, quote, risk off. See, what I'm trying to demonstrate here is that a risk off event in one market tends to be a risk off event in all markets, not just one. Whether you like it or not, there is a percentage of Bitcoin, of people who influence the Bitcoin price. So Bitcoin buyers, Bitcoin speculators, there's some percentage that are strictly there to make money, to make dollars. They're not there because Bitcoin is, you know, the latest and greatest. It's not going to save their world or like change how they think or how they bank or whatever. So you've got to understand that. And I'm not saying it's 100%, but it's not 0% either. You know, it's like 10, 20, 30. There's some number that are purely speculators and nothing more. And they are in all markets and they are influencing price. Okay. I know a lot of my viewers are actually long-term holders and they really don't care what happens, but they just are kind of keeping up with what's going on. Let's bring this to present. Okay. Present day. So I have some stuff right here that I want to go over, so I have to zoom in, but I want to give you the macro view. We have Bitcoin making a really nice run. And right about the time that Bitcoin peaks, or when the, quote, riskiest asset in the world, or the most volatile asset in the world, hits its peak, right? This was its distribution peak. This is crystal clear textbook Wyckoff Distribution. We've gone over that a lot of times. What has happened? So as my cursor moves kind of through this period, look what happens. Right as this concludes, look at what is beginning. Now, as the risky asset, the volatile asset, Bitcoin, has completed its distribution, now look what's happening. A global index, the Dow Jones Industrial Average. It is not confirmed, right? This is not confirmed. That's why there's a big old question mark here. But it is starting to form what really, really looks like a macro Wyckoff distribution top. So here's our Dow Jones. We have a significant uptrend. So Wyckoff is all about rotations. It's about the market going, nope, okay, we're done. It's the Titanic turning. It's the wheel spinning. Whatever analogy you need. It's the market is done. The move is over. Okay. So whenever you start to see this, it needs to be at the conclusion of a massive rally. Well, we have that, an almost 100% move in less than a year. And then what do we have? We have a rally to the highs and a retreat to the lows. Another test of the highs, a lower low. This lower low is key. Let's look at this. A rally to the highs, a retest of the lows, a slightly lower high, and a lower low. Do you see how each of those boxes are checked? 1, 2, 3, 4. A high, a low, a lower high, a lower low. So at this point, anybody who's watching for this goes, oh no. Oh no. Now that leads us to, all right. What might this look like should this continue? All right, well, if all we knew was this, we would look for some kind of break of the trade range and a higher low, potentially, right? These schematics don't have to be completely exact, but it's got to look something like this, right? So let's just see. Eventually, there needs to be a clear break and then a retrace into the trade range. A clear break with consolidation. That's key. Clear break, consolidation, and a break back down. All right, so we have a break above a slightly higher high, a retest with a higher low, so a break above a higher low, leading us to our UTAD. That's I am very lazy when I do these things, and that's why I just wrote UTAD. If your argument was, hey, you know what, I don't know that that's long enough, this is long enough. This range is 174 days, and we're not out of it yet. This is 174 days inside distribution. That is more than enough to conclude a massive rally. Okay, 174 days in a distribution pattern. This is that. Yikes. Here's where we're at. It's very similar to Bitcoin. Remember back when Bitcoin was in its true blue distribution top, we literally had the same stuff. We were watching all the same things. We had a break above the trade range. We had a retest of the lows. We kind of memed around a bit, and eventually we formed this rising wedge, and from there it was GG, right? So that was it. So we would look for something similar on the Dow Jones. The most likely scenario, and I mean like 80-20, right? 80-20 kind of scenario here is that this is distro. And like, that's how you need to be approaching this. Now, if you want to buy the range lows or short from high to low, that's absolutely a good play. That's a big brain play. I was in a bunch of shorts right here that I did not close right there, and I could have. And I kicked myself, and that won't happen again. So I will improve, and that's how I will get better. But I was net short the market, like from these highs, from the break of this trend, because it looks so clean, as though this could be a visit to the lows. So I'm still holding those because they are shorts that are there's not margin. There's not a big amount of margin. And I have puts out like 3 months. So I'm giving this about 3 months to finally break down. Or the invalidation point. This is what I'm getting at. The invalidation point is very similar to what Bitcoin was. You see how we have this invalidation level up here at the UTAD, right here. Okay, invalidation level. It's going to be the same thing. Dow Jones. Go. The invalidation level is back up in here. It's exactly like what we just saw Bitcoin do. That's what's so fascinating about what we're seeing on the traditional markets, is that Bitcoin went through its entire run, distributed, and now the end of Bitcoin's distribution was the start of potentially the traditional market's distribution. So this is either going to continue to rally to the highs before it makes its like eventual drop, or this is going to invalidate distribution and go on to be something completely different, right? Like, oh no, from here on you just need to buy every dip, you know, whatever meme you want to give it, whatever. Do you think the Dow could dump while Bitcoin pumps? I do not. I hope you guys understand. I'm not like pointing to any single piece of FUD and saying like, oh, the stock market is crashing, sell everything, get out of the markets. Like, I hope you understand where I'm coming from. There is a technical setup for a market top in traditional markets. The technical setup could have wide-ranging implications that would have large hedge funds push the button that says risk off. And if they're risk off, that means they're going to sell every piece of crypto they have, whatever. Gotta remember, a year ago, Bitcoin was $10,000. So a lot of these guys who maybe are underwater on their positions, or at best, like, what was a year ago? Hold on, let's look back in time. 365. So a year ago, if you bought whatever this asset was, Dow Jones, I know, but I'm just making the point, it doesn't matter. They're up 26%. So these hedge funds are up 26% on their traditional market stuff, and it's looking toppy. Meanwhile, their Bitcoin holdings are up roughly 400% in the same time. Does that make sense? If they are way up on one asset and they're looking that maybe they're going to start going underwater on net longs, on margin calls or whatever, they're going to have to sell their assets that are way up as a way to infuse cash to not be liquidated on other bets that are going wrong. That's just how hedge funds handle their money. Now, Bitcoiners are going to forever hold their Bitcoin, and that's awesome. But that will not impact the markets near as much. Doesn't matter what I think. Don't trade what I think. You come up with your own system. Nothing matters other than you making a trade and understanding why you took it.